It's starting to feel like a bull market, isn't it? Metals up across the board, gold hits a new record, silver hitting record territory. It is all happening at once, and don't even get started on the rare earth stocks. Hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli. We have a new record in gold, $4,154.20 per ounce. It was only last week we were bouncing off of the $4,000 resistance. Underneath $4,000, it felt like we were climbing $100 a week. Now we are up $154 above $4,000. Silver is trading at $50.65 per ounce after rising to $52. So we have a new record in the precious metals. We have, of course, the story of the weekend. The global story of the weekend, the story of the financial news, the story of geopolitics, and the ongoing massive trade dispute between China and the United States. Here's the article in the Financial Times. China unveils sweeping rare earth export controls to protect national security. And indeed, when you read the directive from the Ministry of Commerce, you see that military usage is the grounds for why they are doing this. And here's the article by Ryan McMorrow in Beijing and Dmitry Sevastopoulos in Washington. China has unveiled sweeping export controls on rare earths and related technologies as it boosts its leverage over critical minerals ahead of an expected meeting this month between Presidents Donald Trump and Xi Jinping. Under the new Commerce Ministry rules, foreign companies will need Beijing's approval to export magnets that contain even trace amounts of China-sourced rare earth materials or that were produced using the country's extraction methods, refining, or magnet-making technology. The restrictions will for the first time create a Chinese version of the U.S. Foreign Direct Product Rule, a measure Washington has used to block semiconductor-related exports to China from third countries. A White House official said the U.S. government was, quote, closely assessing any impact from the new rules. He said Beijing's move appeared to be, quote, an effort to exert control over the entire world's technology supply chains. Asked about the Chinese action at a cabinet meeting on Thursday, Trump said he had just heard about the measures but had not been briefed on the situation. Quote, we import from China massive amounts and maybe we'll have to stop doing that, the president said, adding Treasury Secretary Scott Bessent and Commerce Secretary Howard Lutnick would, quote, figure out how to respond. Jimmy Goodrich, an expert on semiconductor supply chains at the University of California Institute on Global Conflict and Cooperation, said, quote, if enforced and the U.S. doesn't respond strongly, Beijing could have complete control over the entire advanced semiconductor supply chain. Even U.S. AI chips made in a U.S. fab sent to a U.S. AI lab would need Beijing's permission. Goodrich said no chip company with business in China would risk non-compliance with the rule. Now, interestingly, Myanmar, of course, is one of the big producers of the heavy rare earths, which are at the heart of these controls. And we had a very interesting Associated Press update courtesy of BusinessStandard.com. Myanmar town lies in shambles as both sides in civil war vie for control. And what we've seen over the last year as we followed what's happening in Myanmar is, in a sense, the tip of the spear of this entire rare earth story is that the KIA, the Kachin Independence Army, have been making steady inroads for about a year now. We've seen significant U.S. diplomats visiting the region. And so now, interestingly, we're seeing a shift in the fortunes of this war. So this is dated October 12th. 10 days after it was recaptured by Myanmar's military government, the town of Kyokmi stands eerily silent. Schools have reopened, but the town's once busy market is mostly empty. Vendors at some stalls close them at the sight of the visiting journalists, visibly nervous. The once thriving town in Myanmar's Shan state is in shambles, an Associated Press journalist has confirmed on Friday in a rare visit to the war-torn area allowed by the country's military government. The local army allowed an AP photographer to join a trip supervised by pro-military Myanmar media, the only representative of foreign media who is permitted to do so. The military doesn't allow a free press and bars journalists from entering conflict zones independently. So interestingly, in early October, we saw what looked like the first story in months that the Myanmar military junta had actually made some gains. And it does make you wonder if China is behind this, as we've been hearing. Talks of Chinese paramilitary, the equivalent of the Wagner Group, entering Myanmar. And it seemed like the military junta was outflanked. And so one wonders if China is bolstering Myanmar's military junta. So just an interesting development there. And we have a story from the Times of India. China wants an American guarantee from India and a, quote, promise that rare earth magnets will not be supplied to them. So they are really cutting off every possible opportunity for rare earths to make it to the U.S. military and arguably to the European military, but probably the U.S. military is probably their main focus here. And we heard, of course, there was the big response from Trump on Truth Social on Friday, and which was later dialed back somewhat over the weekend. And then this story came up over the weekend, once again, the Financial Times. Pentagon steps up stockpiling of critical minerals with $1 billion buying spree. And so this is quite interesting. This is Camilla Hodgson in London and Steph Chavez and Amy Williams in Washington. And this is a very interesting topic we've been discussing for quite a while, which is the notion of stockpiling. So let's take a look at what they plan to buy here. Are they simply going to deal with the emergency in front of them, or are they going to take a longer-term view and perhaps do what China does, which is if a metal is cheap, you start buying it? The Pentagon has sought to procure up to $1 billion worth of critical minerals as part of a global stockpiling spree to counter Chinese dominance of the metals that are essential to defense manufacturers. The Trump administration's accelerated effort to bolster the national stockpile is outlined in public filings published in recent months by the Pentagon's Defense Logistics Agency. It follows export restrictions imposed on many of the materials by China, which dominates the supply chains for critical minerals and permanent magnets needed for technologies from smartphones to fighter jets. Quote, the U.S. Defense Department are incredibly focused on the stockpile, said one defense official. They're definitely looking for more, and they're doing it in a deliberate and expansive way and looking for new sources of different ores needed for defense products. Another former defense official said the $1 billion is an acceleration over previous stockpiling efforts. Scrolling down, critical minerals are a national security priority for the Pentagon because they are crucial to virtually every weapon system, as well as technologies such as radar and missile detection systems. The Defense Department's recent stockpiling activity is a marked acceleration driven by the Trump administration's renewed enthusiasm for critical minerals. Some of the metals the Pentagon is seeking to acquire were not previously being stockpiled. Quote, China's ability to turn off the supply of these critical minerals would have a direct, palpable, and adverse effect on U.S. ability to field the kind of high-tech capabilities that we're going to need for any kind of strategic competition or conflict, said Stephanie Barna, a lawyer at Cummington and Burling in Washington. Recent expressions of interest from the DLA include plans to buy up to $500 million of cobalt, up to $245 million of antimony from the domestic U.S. Antimony Corporation, up to $100 million of tantalum from an undisclosed U.S. company, and up to a combined $45 million of scandium from Rio Tinto and APL Engineered Materials, a chemical manufacturing company based in Illinois that has offices in Japan and China. The plan shows that the U.S. government was, quote, conscious of how critical this stuff is, and wants to support whatever domestic capacity they have, said one senior executive. It's very early days for Western governments to stockpile critical minerals, but they're increasingly focused on it. So stockpiling is underway. I mean, when you think about it, $1 billion is quite small. Then we have JP Morgan Chase on Monday, putting out a press release. JP Morgan Chase launches $1.5 trillion security and resiliency initiative to boost critical industries. The firm will make direct equity investments of up to $10 billion as part of the $1.5 trillion initiative to address pressing needs in key sectors from critical minerals to frontier technologies. And we have a quote from Jamie Dimon, chairman and CEO of JP Morgan Chase. Quote, it has become painfully clear that the United States has allowed itself to become too reliant on unreliable sources of critical minerals, products, and manufacturing, all of which are essential for our national security. Our security is predicated on the strength and resilience of America's economy. America needs more speed and investment. It also needs to remove obstacles that stand in the way. Excessive regulations, bureaucratic delay, partisan gridlock, and an education system not aligned to the skills we need. So these are the areas where they're looking to invest capital: supply chain and advanced manufacturing. including critical minerals, pharmaceutical precursors, and robotics. Defense and aerospace, including defense technology, autonomous systems, drones, next-gen connectivity, and secure communications. Energy independence and resilience, including battery storage, grid resilience, and distributed energy. And frontier and strategic technologies, including AI, cybersecurity, and quantum computing. So, JP Morgan Chase throws their hat in the ring to help with a $1.5 trillion security and resiliency initiative. Quite something. We have an update as well on the U.S. doing deals outside of the country. Australia mulls U.S. deal $777 million rare earth fund. This is Bloomberg News via mining.com. Australia is considering setting minimum prices for critical minerals and investing in new rare earth projects as part of a potential resources deal with the U.S., The Age reported Sunday. The government has begun talks with miners about contributing to a $777 million strategic minerals reserve, the newspaper said, citing a leaked departmental brief circulated in recent weeks. The proposal under consideration include possible price floors, government-backed loans, offtake guarantees, and direct investment in Australian projects to bolster local producers. So a potential deal in the works between Australia and the United States. Another story from the Financial Times, Western companies warn of China rare earth supply chain chaos. And this is by Kana Inagaki, Sylvia Pfeiffer, Ryan McMorrow, Joe Leahy, and Edward White. Western companies have warned that the renewed U.S.-China dispute over rare earth materials will lead to broken supply chains and higher prices for chips, cars, and weapons as industry executives plead for de-escalation between the two trading powers. And then we have a summary of what happened in April as well as this weekend. Scrolling down. Then we have a quote from a spokesperson for German car industry group VDA. Quote, "The new regulations issued by the Chinese Ministry of Commerce are expected to have far-reaching consequences for deliveries of the affected products to Germany and Europe. Defense executives and other industry stakeholders said the new export controls from China could delay production of some weapon components and push up prices despite recent stockpiling efforts. Rare earths are crucial for various defense technologies, including F-35 fighter jets, Tomahawk missiles, radar systems, and drones." Gracelyn Baskarin, director of the Critical Minerals Security Program at the Center for Strategic and International Studies, said Beijing's new measures would significantly hit the defense sectors. They are taking, quote, "even the most trace amounts of Chinese material out of foreign military capabilities, which is hugely penalizing," said Baskarin. Scrolling down, car makers have doubled or tripled their orders from German magnet maker Magnosphere since Beijing's new measures were announced last week. Quote, "We're going to get it done one way or another," said the company's chief executive, Frank Eckward. Still, he warned of severe problems ahead for the global automotive industry. Quote, "It's not just the car manufacturers, but also the delivery chain to the car manufacturers is becoming broken. They have been getting broken since the beginning of the year, but it's going to accelerate." Depending on how strictly Beijing enforces the new rules, legal experts in China said it could be harder for European companies, even those based there, to collaborate and order new rare earth magnets from Chinese groups. The rules say Chinese rare earth magnet makers will need an export license before they can legally share or discuss any detailed process specifications with foreign buyers inside or outside of China. This includes discussing design drawings and simulation data for rare earth magnets to be sold. And also the semiconductor industry. This is Bloomberg News via mining.com. The world's chip supply chain is bracing for fallout from China's rare earth curbs, so the potential impact of this could be enormous. Businesses across the global semiconductor supply chain are bracing themselves for disruptions from an escalating trade war after China imposed curbs on rare earth mineral exports, and the U.S. responded with additional tariffs and restrictions on software sales to the Asian nation. Scrolling down, an official at a U.S. chip company said the business is rushing to identify which of its products contain rare earths from China and is worried that the country's requirement for licenses will grind its supply chain to a halt. Scrolling down a little more, chip-making machines like those sold by ASML and Applied Materials are especially dependent on rare earths because they contain extremely precise lasers, magnets, and other equipment that use these elements. And we have a quote from Jacob Feldgoys, Senior Data Research Analyst at Georgetown University's Center for Security and Emerging Technology. quote, within the semiconductor value chain, China's new export controls will likely most impact chip makers that use rare earth-based chemicals during the chip fabrication process and tool makers that integrate rare earth magnets into their equipment. So lots of fallout here on this gigantic story in the rare earths, which we have been following quite diligently here on this podcast. Now, Robert Friedland has weighed in with some pretty dramatic statements, and again, the Financial Times, mining billionaire warns of breakdown in the international order. Robert Friedland, of course, founder of Ivanhoe Mines and well-known personality within the industry, billionaire mining entrepreneur Robert Friedland has warned that rising geopolitical tension is contributing to, quote, a breakdown in the international order with far-reaching consequences for global supply chains. Quote, we're seeing a breakdown in the international order, Friedland told the Financial Times at the start of LME Week, an annual gathering of metals and mining industry executives and traders. Quote, these tensions are balkanizing the world economy, and we see it in the copper industry. It doesn't matter where you're ordering, the lead times are extending. While building new mines was, quote, getting more and more expensive, he said. Quote, we have very significant global tensions developing, unlike anything I've seen. So the eminently quotable Robert Friedland, showing big concern, and scrolling down, Friedland said the world was, quote, in the foothills of a major shortage of copper that would hit before the end of the decade, while Maximo Pacheco, chair of Chile's state-owned copper miner Codelco, told the FT the world was already in a supply deficit. The industry was now most worried about operational continuity, the ability of copper miners to keep producing without disruption, said Pacheco. And just another sign of the times, we had a Wall Street Journal headline yesterday on Monday, Ford cuts production of 5 trucks, SUVs after fire at aluminum supplier. Crucial aluminum supplier knocked offline until next year, money-making F-150 trucks vulnerable. So the metals continuing to dominate the financial news headlines here, as well as the political news headlines. It is quite something to behold. So we have a wonderful episode ahead for you. There's been lots going on in Argentina, so we're welcoming back Juan Biset, the former Deputy Mines Minister of Argentina and now a consultant working with the OECD. And so we're going to discuss with Juan what is happening in Argentina and just bigger concerns and discussions in South America. What is going on? What are people talking about? Where is all this going? So a wonderful interview with Juan Biset. Also on this week's Spotlight, we have Fred Ernest, President and CEO of Vista Gold, who discusses the company's Mount Todd Gold Project in Northern Australia. So we're going to hear all about that with Fred Ernest coming right up. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner. You can find us on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to Fred Ernest, President and CEO of Vista Gold, for this week's Spotlight. Join us today. I'm very pleased to welcome to the Northern Miner podcast for this week's Spotlight, Fred Ernest, President and CEO of Vista Gold. Fred, welcome to the show.
Thank you. Good morning.
Good morning, good afternoon, good evening. It is a global world out there, Fred, and quite a lot of things going on in the metals markets, and gold in particular has been dramatic as of late. For those that aren't familiar with Vista Gold, could you give us a little bit of background on the company?
Vista Gold is a British Columbia corporation with headquarters in Denver, Colorado. Our flagship project is the Mount Todd Gold Project, located in the Northern Territory of Australia. It's one of Australia's largest undeveloped gold projects, and it's the largest undeveloped gold project not in the hands of a producer at this time. Vista Gold has been around a long time, first formed in 1983 as Granges. 1996 merged with the Copper Resources and changed the name of the company to Vista Gold. Had operating assets in the state of Nevada for a period of time, and then in the late 1990s was forced to shut those down due to the low gold price. And then with the help of Rick Rule in 2000 to 2006, Vista began acquiring projects. and grew the resource base from a little over 2 million ounces to over 18 million ounces with an average acquisition cost of less than $1 an ounce. And then we began a phase of creating companies and spinning out projects. First thing we did was created Allied Nevada Gold Corp. In 2007, 2012, we created Midas Gold Corp, which is now Perpetua Resources. We've spun out and sold some companies in Mexico, but we've been focused on the Mount Todd Gold Project. And it seems as though all of our hard work, the gold price is finally rewarding us, and the time has come.
Indeed, that is quite a history. And interestingly for me, I feel like I've heard of all of those companies. Now, what makes Mount Todd special? What do you have going on there? It is the focus of the company. Is that correct?
Yes, it is the focus of the company. And recently, at the end of July, we announced the results of a new feasibility study for Mount Todd. Previously, because of the size of the project, and up until this feasibility study, we'd been reporting 9.4 million ounces of total resource, 7.8 million of M&I. We've been thinking about Mount Todd as a very large project. And quite honestly, we designed it as a project that would be suitable and attractive for a senior gold producer to look at as a partnering opportunity with Vista. For a multitude of different reasons, that hasn't happened. And so December of last year, we decided to look at Mount Todd as a smaller project. And we announced those results in July. The total resource grew from 9.4 million ounces to 10.6 million ounces, taking into consideration the drilling that had been completed in 2020, 21, 22, and 24. But most importantly, I think the change is that we set out to redefine the project, whether you want to call it a paradigm shift, turning a new page, starting with a clean sheet of paper. All of those phrases work. But what we set out to do was, first of all, to significantly lower the capex of the project. Second of all, to prioritize grade over tons. And third was to rethink the project and to think about it from the point of view of how would an Australian company build the project. With this new feasibility study, we achieved a 59% reduction in initial capex, dropped the capex from over $1 billion to $425 million. Big part of that is related to scale. We went from 50,000 tons a day down to 15,000 tons per day. And that obviously allowed us to shrink this down to the point where it's an easier package to build by raising the cutoff grade. And I know that in this environment, many companies are lowering their cutoff grades because the gold price has gone up so much. We've taken the approach that grade pays and tons cost. And we've raised the cutoff grade from 0.35 grams per ton to 0.5. That's allowed us to achieve an increase in the grade of reserves coming out of the pit from 0.77 to 0.97 grams per ton. And so we succeeded in both of those objectives. And then we started looking at how do we create a new project. And I want to be very clear, this is not just a smaller version of Mount Todd. This is a completely new look at Mount Todd. We brought in a whole new team of consultants, or nearly a whole new team of consultants. We selected GR Engineering Services out of Perth as our process engineers and study author. And one of the reasons for that is that GRES has a phenomenal track record of building gold projects, mostly in Western Australia, but honestly across Australia. And many of the gold projects they've built are right in this scale of 15,000 tons per day. We liked the fact that, rather than just starting from, basic engineering and material takeoff quantities and estimating things, that they've actually gone out and looked at and said, what does it cost us to actually build the last 7 or 8 projects that we've built? And so we've had a really good internal check on costs. Gives me a great deal of confidence with regards to the CapEx. We selected an Australian mining engineering group to do the mine planning and reserves. We used Mining Plus. We used WSP for our geotechnical work, and brought in a new tailings group to look at tailings designs. And so we've adopted what the Australians call fit for purpose design. It's a phrase we don't hear too much here in North America, but it's very much the standard in Australia. It's a concept that says, build what you need to build. but don't overbuild it. Just as an example, here in North America, when we install crushers, we put crushers up on concrete pedestals. We pour a lot of concrete. In Australia, the standard is they pour the foundations in the ground, install structural steel, mount the crushers on structural steel with dampeners. And this works very well. And it saves time, it saves money, it makes it easier to build. And so just as an example, that's one of the things that's been adopted in the design of the project. We've, I guess, given into some very North American traditions that we've held on to for a long time. We as North Americans like to own our own mining fleets and operate them. We've adopted contract mining as the strategy for developing Mount Todd. It comes with some very distinct advantages for us. One, it minimizes the operating and staffing risks because that then becomes the responsibility of the mining contractor. And there's a very competitive and viable contract mining industry in Australia. And we've worked with one of the three biggest names in that space in Australia. And so I'm very happy about that. Another thing that we've done is in the past, we've tried to adopt the very North American model in that our workers will live in the town close to the mine site, that we would incentivize people to move there. Quite honestly, Catherine, which is 30 minutes from the mine site, is having some housing shortage issues they have for the last several years. It's not being solved. And so we decided to adopt the more traditional Australian strategy of having a fly-in, fly-out workforce. We've included a full-service camp with all of its amenities as part of the project, and those are included in the cost. So we've tried to turn this from this very large, build it with a North American senior producer as a partner, build it like a North American project, to build it as an Australian company would build it. And it's taken on a whole new look. And I think that the market is getting it. It's a better way to build the project.
Okay, it sounds very interesting. And I recall this discussion of the difference in styles between, say, Australian and North American mining. I believe we've discussed that here before. So that's super interesting. So then where are we with this project then? What comes next?
Well, I've just returned from Australia. I had some very productive meetings with government officials on how we modify the permits that were already in place for the 50,000 ton per day operation and refine them to align with a smaller operation. I believe that we have a clear path forward for most of those permits within the next 6 to 12 months. Obviously, one of the next steps is increasing capacity, corporate capability in Australia. We've operated for a long time with a very small team. And we are starting the process of looking at recruiting capability in the country. How do we get the team on site so that we can either build this ourselves or represent ourselves in a joint venture?
Okay, excellent. So as we wrap up here, Fred, what is it that you want investors to know here? What do you want them to take away from this conversation? What do you want them to know about Vista Gold?
I think, first of all, Vista Gold is firmly committed to seeing the Mount Todd project develop. We've rethought the project, redefined it. We've designed it as a project that can be built and will be very profitable. We did our study at $2,500. We have a $1.1 billion NPV. At $3,300, it goes to $2.2 billion. I would say that we are still incredibly undervalued. We continue to move forward with discipline, and we're managing this process to maximize value for shareholders. I think that this is an exciting time to be in the gold business, and Mount Todd truly represents a tremendous investment opportunity if you're looking for exposure to this just amazingly strong and upward moving gold market.
Excellent. And that's vistagold.com. And how should people reach out if they want to know more?
They can reach out to Pamela Solly, our Vice President of Investor Relations. She's available at the corporate offices all the time. Our website can get you there, www.vistagold.com. And certainly we will be happy to take time with anybody who has questions about the company or the project.
Fred Ernest, President and CEO of Vista Gold, thank you for joining us and telling us all about the company and the Mount Todd Gold Project in Australia.
Thank you.
Thank you once again to Vista Gold for sponsoring this week's episode of the Northern Miner Podcast. If you want to learn more, visit vistagold.com. Turning to the website, silver price hits new peak as short squeeze deepens. This is by a staff writer at mining.com. Silver set a new record above $52 an ounce on Monday as rising demand for precious metals worldwide deepened a historic short squeeze in the London market. Spot silver jumped 2.4% to a high of $52.07 per ounce, surpassing last week's peak during which it traded at levels last seen in 1980. Behind silver's rally were concerns over a depleting silver inventory in London, which drove prices to a premium over those seen in New York and prompted traders to ship metals across the Atlantic for a profit. As of Monday, the premium was above $1.60 an ounce. And we have a quote from Goldman Sachs Group analysts who wrote in a note on Sunday. The silver market, quote, is less liquid and roughly 9 times smaller than gold's, amplifying price moves. Without a central bank bid to anchor silver prices, even a temporary pullback in investment flows could trigger a disproportionate correction, as it would also unwind the London tightness that drove much of the recent rally. So, big moves in the silver market, and continuing on, copper price hits new high as tech cuts production forecasts. This is also by a staff writer at mining.com. Copper surged to a 16-month high in London Wednesday when Teck Resource lowered its copper production guidance for 2025 after persistent setbacks at its Quebrada Blanca mine in Chile and Highland Valley copper operation in Canada. Prices climbed as much as 0.5% to $10,815 per ton on the London Metal Exchange. The company said it now expects to produce 170,000 to 190,000 tons in 2025, down from 210,000 to 230,000 tons. Teck also trimmed annual production targets for the next 3 years. And scrolling down, supply worries intensified after Freeport-McMoRan declared force majeure at its Grasberg mine in Papua, Indonesia, the world's second-largest copper operation, following severe flooding that halted production. Quote, we are in a world of unprecedented copper supply disruptions, and many of these issues are not short-term, analysts at Jefferies wrote in a note. Quote, yet another miss at QB just adds more fuel to the fire. Citigroup analysts expect copper to climb further, forecasting prices could reach $12,000 per ton in the first half of next year, amid supply cuts and favorable macro trends, including a weaker U.S. dollar. They project prices will gradually ease through 2026 as disrupted mines resume production. Continuing on, China plans zinc exports as global rally opens window for sales. This is Bloomberg News via mining.com. Chinese zinc producers are preparing to sell the metal overseas as a rare trading opportunity opens up after a spike in international prices. Zinc in London has marched higher since April, but in Shanghai it's been bumping along close to its recent lows. The disconnect speaks to a two-speed sector pitting growing output and relatively weak demand in China against a global market where smelters have cut production and stockpiles are thinning. Cash prices on the London Metal Exchange have surged above futures, signaling a growing shortage in Western markets. You know, you take a step back here and it's starting to look like quite a few metals are running low at the LME. The market's backwardation, which points to near-term tightness, is at its most extreme in 3 years. China is the biggest producer of zinc, which is used to galvanize steel and thus heavily affected by the years-long collapse in the country's property market. The last time it exported meaningful volumes was in 2022, after Russia's invasion of Ukraine raised energy prices and triggered widespread smelter closures. Continuing on, Rio Tinto says strong year-end iron ore push needed as China demand surges. This is Reuters via mining.com. Rio Tinto said on Tuesday it needs a strong year-end finish to meet its iron ore shipment target, even as Chinese demand gathers pace as global economies front-load investment ahead of looming tariffs. Iron ore prices have surged to their highest level since February, driven by targeted infrastructure stimulus in China that boosted steel production, Rio said, with China's iron ore imports hitting a record high in September. So China is now importing record amounts of iron ore. Rio said it shipped 84 million tons from its operations in Western Australia during the third quarter, narrowly missing the Visible Alpha consensus estimate of 85.5 million tons. Quote, a strong Q4 performance is required as the system remains tightly balanced and has limited ability to mitigate further losses. 4 cyclones in the region disrupted iron ore operations earlier this year, prompting Rio to forecast its 2025 iron ore shipments at the lower end of its guidance of 323 to 338 million metric tons. Scrolling down, the quarter was the first under new CEO and former head of iron ore, Simon Trott, who in August announced a simplification of the company's structure into 3 divisions: global iron ore, aluminum, and lithium and copper. Like its peer, Rio is ramping up the production of copper, which is expected to be in high demand during the transition to greener forms of energy. Very interesting there. Also from LME Week, exchange to roll out premium pricing for sustainable metals. So at first, this was resisted by executives at the LME. Now this is being embraced. This is Reuters via mining.com. The London Metal Exchange plans to launch a new mechanism to establish how much of a premium customers are willing to pay for metals produced with lower carbon and that meet other sustainability standards, it said on Monday. Some miners have complained their metals produced with renewable energy are not able to compete with cheaper output produced using coal. The LME, the world's oldest and largest market for industrial metals, has previously rejected introducing separate sustainable metals contracts on the exchange, arguing it would dilute liquidity. Many end users have resisted paying for sustainable products, and for some metals, there may not be a premium, Chief Executive Matthew Chamberlain told Reuters. Under the new initiative, targeted to start operating in the first quarter of next year, the LME will expand an existing partnership with digital platform Metals Hub, which already trades low-carbon nickel. LME brands of copper, aluminum, nickel, and zinc will be eligible for trading on a sustainable section of Metals Hub if they meet a range of sustainable standards. These include maximum carbon footprints and third-party sustainability standards based on internationally recognized methodologies, the LME said. And continuing on, a story that relates to our feature interview with Juan Biset, Argentina mining investment on pause as midterm elections loom. This is Reuters via mining.com. Political uncertainty ahead of Argentina's October midterm elections is holding back investment decisions in the mining sector, the country's main industry group said on Thursday, warning that instability and unclear policy signals are delaying project development. Quote, "No one is going to make any decision these days. That's crystal clear," said Robert Cachola, president of the Argentine Chamber of Mining Companies, in a meeting with journalists. And we will discuss that in depth with Juan Biset coming up. Continuing on, nuclear startup to build reactor plant at Manhattan project site. That is quite a headline. This is Bloomberg News via mining.com. Radiant Industries, a California-based nuclear startup, plans to build a factory for its reactors at a site in Tennessee that was once a part of the Manhattan Project. Radiant expects to break new ground early next year, and the facility may be producing small reactors by 2028, according to a company statement on Monday. The land for the new factory in Oak Ridge, Tennessee, was used by the U.S. government in the 1940s to enrich uranium that was critical for the original atomic bombs. Quote, "What was formerly the first Manhattan Project site will now be the site of the first portable nuclear generator production," Doug Bernauer, Radiant's founder and chief executive officer, said in a statement. Quote, "By 2028, we'll be rolling out the first factory-built nuclear generator, and within a few years we'll be producing over a dozen a year." So the nuclear renaissance continues over in Tennessee. And finally, just a couple of headlines here. United States antimony soars to all-time high on $25 million financing. That's by a staff writer at mining.com, and also by a staff writer at mining.com. Critical metals surge on second U.S. rare earth offtake deal for Tanbreeze. Those are your news stories. Now, let's take a look at metal prices. Turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.02%. That is 0.14% lower than last week. The UK 10-year gilt is yielding 4.61%. That is also down 0.14% on the week. The Italy 10-year bond is yielding 3.44%. That is down 0.16% on the week. France's 10-year bond is yielding 3.43%. That is down 0.17% on the week. Germany's 10-year Bund is yielding 2.6%. That is down 0.13% on the week. Japan's 10-year bond is yielding 1.66%. That is down 0.02% on the week. And China's 10-year bond is yielding 1.76%. That is down 0.11% on the week. So yields dropping, likely on market concerns on Friday. Turning to precious metals, gold is trading at $4,152.90 per ounce. That is $178 higher than last week. Silver is trading at $50.97 per ounce. That is $2.94 higher than last week. Platinum is trading at $1,662.30 per ounce. That is $28 higher than last week. And palladium is trading at $1,501 even. That is $175 higher than last week. So rip-roaring precious metals market. Turning to industrial metals, copper is back above $5 at $5.08 per pound. That is 10 cents higher than last week. Iron ore is trading at $105.74 per metric ton. That is $1 higher than last week. Aluminum is trading at $1.26 per pound. That is 3 cents higher on the week. Lead is at 90 cents per pound. That is down a penny on the week. Nickel is also lower at $6.88 per pound. That is 14 cents lower on the week. Tin is trading at $16.41 per pound. That is 18 cents lower than last week. Cobalt explodes higher to $18.99 per pound. That is $3.11 higher than last week. Lithium is trading at $10.25 per kilogram. That is 8 cents lower than last week. Uranium is trading at $78.90 per pound. That is $2 lower than last week. And zinc is slightly higher at $1.37 per pound. That is a penny higher than last week. So despite a few metals slightly lower, overall it's feeling like a rip-roaring bull market. When you look at the precious metals, when you look at copper, when you look at cobalt, there are still metals that are cheap when you look at nickel and lithium, but they are becoming far and few between. And those are your metal prices. Coming up, I'm very pleased to welcome back to the Northern Miner Podcast, Juan Biset, former Deputy Mines Minister for the government of Argentina, and now a consultant. We discuss what is happening in Argentina, its resurgence in the news, how Javier Milei is doing, as well as what is happening in Peru and Chile, and the opportunities that still remain in Argentina, particularly in the copper market. I hope you enjoy the conversation, and I will see you on the other side. Joining us today, I'm very pleased to welcome back to the Northern Miner Podcast, Juan Biset, former Deputy Mines Minister for Argentina and consultant. Juan, welcome back.
Hi, Adrian. It's a pleasure to be back.
It's great to have you, Juan. There's so much going on right now in the entire world, but especially South America. We've started to see Argentina in the news recently. It sounded like Javier Milei wasn't doing as well as he had been. He lost some elections. Could you bring us up to date, since you are based in Buenos Aires? Could you tell us, in a sense, what's going on? Can you bring us up to date somewhat?
Sure, I'll try. I don't know how long we have. What's going on in Argentina? I think that Javier Milei's government is a bit par for the course, and I put it that way, which means, he'll score some goals, have some fumbles, and that's what's happening. It's not, to me, nothing to be particularly worried about. He did better before. He's not doing so good now. And yes, he's had some less than stellar results in some local elections. I am positive that, this is, again, par for the course. The government will do better in the upcoming elections. They've taken a couple of lessons learned from what did not work in the provincial elections in the province of Buenos Aires, which, again, are of symbolic import. But politically, they are very, very small and very parochial. There's nothing really there that would hurt the government's governability or anything of that sort. It's just a bit of a wake-up call of, hey, maybe people are not so happy or are not as happy as they were before with the government's policies, and especially with the tone. There's a bit of overdoing it. Argentines, we are very happy with, a number of measures that the government has taken, the inflation reduction, a lot of correction in the sort of macroeconomic front. Yes, it's a process. It's a transition. So it is taking time, and some of the results are, longer in getting. But again, the government will do better in the upcoming elections, which do have teeth. These ones are national legislative elections, and the government, I am sure, will gain more MPs than it currently has. Plus, it also has had very significant support from the US government, the likes of which I have not seen in my life. It reminds you of Mario Draghi's, will do whatever it takes to shore up the euro kind of thing. So, yeah, very, very significant support.
That is super interesting. Now, when Milei came into power, there was a lot of optimism. There was economic optimism, but particularly in the resource industry, that, this was going to be someone who's great for business. We saw certain programs were announced, just to incentivize companies to develop there. Here we are, I guess, a couple of years later. How has this all worked out? Has it kind of worked out as people had hoped, or is it not as people had hoped?
Thanks for bringing that up. Yes, the program that you refer to, it's called RIGI by its Spanish acronym, which is Large Investments Incentive Package. And it is very significant. If I had to sort of summarize it in a nutshell, I would say it's an equalizer of government taxes, FX restrictions with other mining jurisdictions in the region. In some aspects, it's more convenient. In others, maybe not as much. But it equalizes you with other jurisdictions that do mining. But the difference here, Adrian, and which I really sort of would like your audience to take on board, is it has teeth. What it has done is it gives you 30 years stability. No government for 3 decades can change the rules of the game going forward. And if they do, if someone were to do that, you can bring them to court internationally. It has already ceded jurisdiction to international arbitration. So this is a law that gives investment a lot of guarantees going forward. So it's not just convenient, it's long during, and it also has, teeth, as I said. There is a short window of opportunity to enter RIGI. There's a 2-year window that closes mid next year. It may be extended for another year, but we don't know if that's going to happen. I would assume it would, because it has been very successful in attracting a number of sort of announcements, and especially sort of in the energy and mining sectors. It's been a game changer, it was dubbed, and it has been. But that said, I have my thoughts on the industry as a whole and why, to my view at least, they seem to be sitting on the fence at least to a certain extent. And I think that should change. There are a number of reasons that, speak volumes that shovels on the ground are needed, and the time is now. And I would really sort of push the industry to reconsider Argentina. If you need a headline, Adrian, I would say Argentina is the last large untapped copper jurisdiction in the world. That's what it is. And the conditions are there now. Don't sleep on them. Act now. This is the time.
Well, we're always looking for a headline here, Juan, so I appreciate that. And it's an interesting point. Now, Roberto Cachola, president of the Argentine Chamber of Mining Companies, said, quote, "No one is going to make any decisions these days. That's crystal clear." And it seems that was said in the context of potential government change and instability. But with this RIGI program, it seems like there is stability. So what do you think the issue is?
There's a parallel, Adrian, with the mining industry as a whole. You know how back in the day, we used to be tarred and feathered because we sort of were into this industry. And all of a sudden, it's taking a lot of time, but it's changing and changed a lot. So the same thing happens with Argentina. There is a history to Argentina. So I understand why people would be hesitant about investing large sums of money in Argentina. But there is a difference now. And I think that the fact what Roberto was referring to, I'm sure, is the midterm elections coming up and the legitimate hesitance by investors on, is this for real? Is this actually happening? I'm not just a consultant for, companies and governments. I'm a lawyer by training. So take my word for that. This is the time. The law is there. Take advantage of it, irrespective of how well or poorly Milei does in the midterm elections. If you file your investment program, your project within RIGI during the 2-year window, it is ironclad. It's going to last for 30 years. No one can do anything about that. And if you couple that with what's going on globally, well, it's a no-brainer. It's pretty obvious. I'm super happy. I've been to Peru, as I think I told you before, Adrian. There was a lot of discussions on the geopolitics of critical minerals of copper and the region and the role. Everything's there for a success story.
Yeah, well, let's talk about copper then, because it is quite interesting what you're saying. And of course, these minerals, as you point out, have bubbled from the bottom to the top, story that nobody cares about to the story that everybody cares about, particularly last weekend. So, in terms of copper, then, why is it that you think companies are hesitating? Like we saw McEwen Mining, for example, is in there. Like there is some movement, but you don't feel like there's not do you feel like the big players, for instance, are just not doing it? Like, what do you think's happening there? Is it just suspicion over the previous history, basically?
What I think, Adrian, is, there are exceptions. The Lundins, the Northern Miners, persons of the year of 2024, they know what they're doing. So is BHP. They have this JV on Vicuña. Los Azules announcing, Glencore announcing also that it's submitting projects under RIGI. But one thing is the announcement. The other thing is shovels on the ground. And I think that Argentina, we had it coming. People do not immediately trust the jurisdiction. There's a reason for that. There's a history, and I get it. But when you take half a step back and you look at the big picture, I consult for the OECD, and I traveled the world with the OECD and its sort of mining regions initiative. And you see the same 5 or 6 issues popping up everywhere, be it Finland or Australia or, Canada or Argentina. It's communities, permitting, political instability, the roster. When you look at those, you can absolutely see how Argentina is equalized in a way that, maybe political risk is a bit higher, but, it is a Pacific, in the terms of peaceful, rather, jurisdiction, no community issues to speak of. Yeah, there's lacking infrastructure. Well, when you look at other jurisdictions that are miners, let me take Peru, for instance, which I just visited. It's had 8 presidents in the last 10 years. That is political instability of sorts. And still, it's one of the world's largest copper producers. So the same array of issues. Argentina, of course, is not perfect. There's no perfect jurisdiction. I think that history is playing its a dirty trick here with Argentina, cashing in many years of instability and having companies hesitate and be doubtful of the jurisdiction. That said, no better time than now. Plenty of announcements. Start building.
This is fascinating, Juan. And I'm curious. I mean, you said you visited Peru. What are people talking about these days? Are they talking about copper? Are they talking about critical minerals? What is top of mind for people in the resource industry, say, when you go somewhere like Peru? What are people concerned about?
There's 2 agendas, the global and the local. Locally, Peru is concerned with retaining its investment grade, and they are very mindful of the so-called artisanal miners, which it's illegal mining that's taking a big chunk out of the export is in the billions these days, and it also fuels illegal activities and everything else. So they are concerned about permitting. It's taking a lot of time, and there are like 20 odd different agencies that need to be touched before a permit issues. So yeah, it's the usual, but that's what concerns Peruvians with their mining. Globally, I would say there's a lot of regional talk. If you look at the disconnect between expected supply of copper and the tsunami of demand that's coming, there was this very interesting panel on transitions, plural. Not just the energy transition that everyone talks about, but there's also a demographic transition. We're going to be 2 billion more by 2060. That's less than 40 years from now. And that's a lot of people with, its attendant sort of mineral footprint. Also, the AI digital transition. That's electrons that need to be sort of moved from A to B. And then there's also the geopolitical transition, which means There's a whole array of demands there concerned with not just military uses, but also where are you going to get it from? So there is a gigantic wave of demand happening, and the region, together with Australia, this is super interesting. This I picked up in Peru, is a net exporter, a net producer of minerals. If you look at Africa, for instance, and you add demographics to that, some of the largest cities in the world will be in Africa in a couple of decades from now. So most, if not all of its production of minerals will be self-consumed. So there's only two regions in the world that, those two trends give positive or, add up, which is Australia and Latin America. So the world needs another Chile in terms of the copper, supply. Where are you going to get it from? Yes, Africa will do its bit. Peru is doing its utmost. So is Chile. You can think of, Oyu Tolgoi, but you've seen the news and how tight supply is. So Argentina, Peru, and Chile are absolutely key going forward. So there's talks of regional approaching, an approach to what are the blocks doing? If you look at the Chinese, we know there's 30 years head start. They are all over the place, especially in Africa. The USA, well, it's of recent doing a lot of things, a bit haphazard, early days, still not clear, what's the approach, equities, contracts with the Department of War. It's not super clear. And the EU, it's MOUing its way through the, energy transition. It's signing MOUs left and right and center. So the region is beginning to think of itself as a region, key player, and will play the blocks to its benefit. So the window of opportunity to secure super deals is narrowing if you are the West, let me put it that way. So I do not see going forward any alternative, but I have yet to see actual action, a la Lobito corridors. There's no infrastructure investment. There's a lot of talk, a little bit of action.
It's funny you mentioned that. I mean, because the biggest infrastructure thing I've heard, wasn't it the big port that China built in Peru? Wasn't it? I mean, that was the biggest thing I've heard, maybe 6 months ago or something, right? And this is kind of where I wanted to go with the next question, which is we've seen a trend in recent years that countries such as, countries in Africa or maybe Indonesia, they don't want to just send out the raw materials anymore. They want to, build the batteries in-house and, even make the cars locally. Is that what you're starting to see? Like, do you see, say, like BYD come in and do you hear announcements in the news when you open the newspaper or go to the news website in Argentina? Are you seeing announcements of, say, like BYD building factories or a sense that South America needs to be higher up on the supply chain, so to speak?
There's certainly a camp that thinks that way. I happen to be in another camp. You can take two examples. There's Canada and there's Australia. Australia has the best coking coal in the world and the best iron ore in the world, barring, Brazil or whatever. Why is it not a powerhouse in steel making? There are other factors that come into play. When you take Canada, for instance, it is a powerhouse in aluminum because it has cheap energy and all sorts of other things going on for it. So my point of view is that, yes, super welcome to have, other value-added activities taking place in the jurisdiction, but I would not put that as the center of my strategy. My strategy is the world needs minerals and it will need our copper. Let's be the producers of choice. And let's make sure that that copper production benefits our citizens in the best possible way, be that through education, infrastructure that, lasts beyond the mine, has dual purposes and uses, and eventually, if through all of that, it makes sense, business sense, to have a BYD factory in Argentina, so be it. I'm super happy about that. I would not just make that the tractor in the strategy, but rather a nice to have. But yeah, there's another camp that thinks completely different.
Sure. No, very interesting. Now, we've talked a little bit about Argentina. I mean, what is your sense about, say, Peru and Chile? Like, are they having similar investment issues or are they completely different stories, say, Peru and Chile?
There's a factor that really changes the game, which is momentum. Once you have a mine operating, it's there for decades. Once you have a mining industry there, it is there for decades. So I'm going to go out on a branch here and say Argentina will be a mining jurisdiction, no doubt about it. It is an inevitability that Argentine copper will get to market simply because there's no other place to get it from. You know how a project takes a decade and a half from find to production. Let's, generalize. Argentina already has a number of world-class assets, projects that are found, are measured, they are well known, and yes, they are steep. You need to invest in those, but it's not going to get any cheaper. It's not like inflation is going to disappear. So the price tag for those projects will be the same. The prices for copper will go up. We all know this in the industry. It's just a matter of time. And to me, it speaks of a bit of lack of vision, if you will, maybe even a lack of responsibility from mining leaders to say, what are we waiting for? The crunch to happen and the transitions to be in peril or delayed for us to invest? Should we not be investing now? It makes business sense. We hit the market when the price is there, not 5 years after the price gets there. Maybe I'm oversimplifying and there are other factors at play, I'm sure, but the larger picture is pretty simple to me.
Right. Like, in a sense, your sense is that Argentina still isn't being taken as seriously as it could and should be in terms of, say, a solution for copper and helping alleviate what seems to be a pretty big crunch on the horizon.
Yes. And a crunch that, again, we need another Chile at the world level. We need 5, 6 million tons of additional copper. That's an awful lot of copper. So there's no real competition between Chile, Peru, and Argentina. There's only complementarity because we will be all doing our most to get our copper off the ground, and still there will be an undersupply of copper. And the same goes for Africa and Australia and everything else. The world needs all the copper it can get. So Argentina and Chile and Peru will have to play its part. That said, if I had, the button through which you decide an investment, I would say maybe now's the time, which when steel prices are lower, when I can get my way in terms of, I'd rather build this railroad than that one because it, for whatever reason makes more business sense for this project A rather than B, you can still call a number of shots in Argentina and regionally. Do it.
How significant are the copper resources in Argentina? Like, are they on the same level and scale as, say, Chile and Peru? Like, is there any sense of that, or is it still unknown because this still needs to be developed?
I made a presentation not so long ago, and I only referred to the 7 largest copper projects out there, or the most well known. And this is of a jurisdiction that has north of 70% unexplored. It has yet to be explored. Okay. So with only 30% explored, you're looking at projects that, I'll take First Quantum's Taca Taca in Salta, 9.4 million tons of copper. That's metal content of measured and indicated resources. That's almost 10 million tons of copper, just one project. El Pachón, Glencore's in San Juan, 8.7 million tons of copper. Filo del Sol, Vicuna district. You just need to look at the latest headline or PFS or FS to see how significant that region is becoming. All in all, there's almost 40 million tons of copper in those 7 projects. And it's just, again, 7 projects. And those also have almost 42 million ounces of gold. So, these are porphyries. They're polymetallic. They usually come in the shape of copper, gold, silver, and moly. If you put all of that together, it's a very significant chunk of very valuable metal waiting to be developed. It's the same Andes, the same range. We are lying next at the border, Pelambres, Antofagasta Minerals, El Teniente, Los Bronces, Chuquicamata, all of those large nameplate names in the mining industry are just, a stone throws away from Argentina. So the geology is very much the same. For a very reasonable number of reasons, if you will, it has not been developed.
Now, when Milei was elected, there was a sense that he wasn't super pro-China, right? Like he dropped out of BRICS. He, said, if I had to paraphrase, we would never do business with communists, this sort of thing. What's the relationship with China right now? It seems to have softened somewhat. Why isn't China in there doing development of copper, for instance? How would you describe the relationship with China in terms of minerals in Argentina?
I mean, Argentina's mineral portfolio is not super large, but there are a number of hot items, lithium being one of them. In lithium, China is much more active. I would just point to your attention that under RIGI, all submissions have been approved, but one, which was a lithium investment by Ganfeng. That was the one RIGI submission that was not approved for a number of technical reasons, but still, there you go. But then again, the usual change in perspective from being a candidate to being in, government. One thing is to, take the stump and rant or whatever it is that you do when you're a candidate. A very different one is to run a country. So I think that Argentina under Javier Milei will do whatever makes more sense. But I would say that culturally, historically, and maybe ideologically too, and you've seen the Trump administration's very significant, unprecedented support of Argentina's government, it will lean towards the West, all things being equal. And I have not seen too much Chinese interest in Argentine copper. It's rather more of a Western story to date. That said, there's two logistics. You can go through the Pacific or you can go through the Atlantic. Both are there for the taking. The Argentine copper is closer to the Pacific, but there are railroads old and needing refurbishment going to the Atlantic. Which way is it going to go? I have yet to see that story unfold.
Okay, interesting. And in terms of the Trump administration, then we hear of this, I think it was a $20 billion bailout of some kind, some sort of currency swap. In a sense, it's kind of surprising considering all of the deals we've seen with the US internationally and this kind of obsession with critical minerals, but I didn't hear of any, mineral aspect to that deal. Are you seeing any interest from the Trump administration in resource development in Argentina?
I have seen that interest, but it's still at the headline level. I have not seen it come down to the granular aspects of how you actually make a deal. Are you thinking of offtake agreements? Are you thinking through infrastructure, ports and railroads securing access? Are you bringing in the Exim Bank? How are you going to do this? The details are still a bit muddled. The interest is there. There have been a few sort of high-level visits from government officials to Argentina, even defense officials or War Department officials coming down to Argentina, visiting the lithium triangle. Someone needs to sit down and iron out the details, but the interest is there, I think.
So just as we wrap up here, Juan, what are you looking for as you look forward here? I guess the midterm elections, as far as I understand you, they're relevant, but don't put too much importance on them. What are you looking at here as we look at the future here in Argentina?
Someone said not that long ago that there's no such thing as critical minerals. What's critical is mining. I agree with that. And if you look at the list of critical minerals, every year it gets larger until we'll have the whole of the periodic table being considered critical, right? So that means that mining is critical. So what I'm looking at here, Adrian, is a jurisdiction that's decided to become a mining jurisdiction. The government is playing long-term with a number of initiatives, not just RIGI, but others, sort of pushing forward exploration of that 70% that remains to be discovered, making sure that information is more readily available, taking other steps, deregulating stuff, cutting red tape. Permitting in Argentina is super competitive. For a large copper project, it takes 16 months. It's not so short that would raise eyebrows, and it's not that long that will make you not know when your project is doable. So what I'm looking to happen in Argentina in the future is people should consider Argentina as a jurisdiction that has plenty to offer, that of course has plenty, again, no jurisdiction is perfect. But if you look at other places where you're doing business, we could talk about Africa and how the west of Africa, how tricky it's become of late. And, any other place in the world, it's those 5 or 6 same issues that you need to tackle. Argentina brings some challenges, but also a lot of opportunities. So I think that something someday is going to give. Someone's going to start putting shovels in the ground. And once that momentum happens, it'll be too late for you to come and say, hey, I want to buy or I want to, get a stake at one of these projects. Don't be that guy.
So there is still opportunity in Argentina. Juan Biset, former Deputy Minister of Mines for Argentina and consultant, thank you for joining us and giving us an update on Argentina and the region.
It's been a real pleasure, Adrian.
Thank you to Vista Gold for sponsoring this week's episode of the Northern Miner Podcast. If you want to learn more, visit vistagold.com. And also a big thank you to Juan Biset for appearing on this week's episode. And also thank you, dear listener, for continuing to support this program. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.